With Bitcoin closing in on a potentially huge bullish cross on the daily time frame, the dumpy SPX prepares for a potential bearish cross. And is this massive pattern from 4 years ago repeating all over again? And what does it mean for the baby bulls? I'm your host, Dugan Diddles, and with a massive pattern right now preparing to confirm a reach around surprise for the baby bulls, is this bad? Or is it potentially very good? Make sure to hit that like, subscribe, turn use these absolute time-sensitive alerts as well. If you guys are interested in bonuses, securing your crypto, trading, getting altcoins, make sure to check out all the links in the description and pin in the comments below. And as well, I got more messages today. More fake accounts reaching out to people. I have one Twitter and one Instagram, and they're both below. Every other account is fake, and I will never message you asking how your trading is going. That's how you know that it's a fake account trying to get you to send them crypto so they can steal it and never give you 2 times back or never give you anything back, just give you nothing back. It is 100% my mission for the scam bots pretending to be me to never make a single another penny, another single penny from stealing from people using my name. Absolutely very annoying. But without any further ado, let's dump on it. Wow, absolutely huge. So Bitcoin, so far, this is absolutely really big. So it's been a very boring last couple of, about a week and a half. But guys, so far, if we take a look, we take a sneak peek here, what exactly has happened? Well, almost amazingly, Bitcoin has actually defended the 50-day moving average so far. And more importantly, we have yet to set a macro lower low. So both of those things, despite Bitcoin being very boring, despite engagement being record lows, look around YouTube, look around Twitter. People are not interacting as much. Why? Because it's boring. But despite all of that, Bitcoin has done some very big things, of which if it continues to just be decent, this could end up turning very, very good. So over the last week and a half, what we've seen is we've actually defended the 50-day moving average, and this is actually very big. And in fact, because of doing so, we now have the opportunity here to flip this 21-day back above the 50-day moving average in somewhat of a bullish cross, very reminiscent to right here, back in October of 2021, when Bitcoin went from about 39,000 up to about 69,000. Nice. So that's very big. That was the last time we had a bullish cross with the 21 going above the 50 on this Bitcoin daily chart. But before we continue with Bitcoin, the SPX actually now risks getting a bearish cross, the 21-day moving average below the 200-day. Now the 21 is a much faster indicator than the 200-day moving average, which is a lot slower, lags behind a lot, which is not as significant as the 50 going beneath the 200, which is considered a death cross, which also doesn't necessarily mean anything like insanely dumpy as the name would suggest. But this is something very, very important to watch, 100%. Okay, this is something we cannot ignore. But before we continue with all of that, do we have this mega scary pattern, and what does this mean? In my opinion on this as well. Bitcoin price fractal from 2018 could trap the bulls and sink Bitcoin to 25,000. And here is why I don't believe that that's the case. So first of all, the Erie fractal risks sending Bitcoin to 25,000 despite its sharp recovery. And some Twitter analysts, so first spotted by Crypto Bullet, an independent market analyst, or in other words, a Twitter analyst. Okay, that's another thing. Literally everybody in the crypto space, there's no such thing as a professional crypto analyst. Okay, that's the funniest thing to me. I make cream jokes all the time, and ironically or unironically, my analysis is just as valid as literally anyone else in the space, which makes me think the analysis is a little bit silly, to be honest. But anyway, it's always funny reading an independent market analyst, meaning literally some guy with a Twitter. The fractal shows Bitcoin recreating an inverse head and shoulders that preceded its price decline towards $3,000 about 4 years ago. And there's some anticipation this could happen again, right? Everybody's looking for things to repeat, and very, very often they don't repeat exactly as they once did. So we see here we have this going back all the way a couple of years ago to this move that I remember this. I remember living through this, right? We had about the $6,000 level, and then we went all the way up almost to about $9,000 here. Okay, inverse head and shoulder breakout, and then we dumped down. Okay, so that is very interesting. And people are pointing out, if this would repeat, maybe we see Bitcoin run all the way back up to the mid 50,000s and then dump again, which in my opinion, one of the reasons this is a little tricky is because I do think we are in a macro uptrend over the next few months. Let's say we do get up to the mid 50s and receive some sort of pullback. I think that's more likely than it is not, because we're going to need pullbacks anyway. But by that point, I'm sure a lot of people might be very scared, like, oh man, maybe this pattern everyone talked about a month ago is actually going to happen. And, maybe that's the perfect opportunity for it not to happen. So just a couple of months ago, from October 2021 to now, Bitcoin underwent an identical price trajectory, forming two higher highs, near 65 and then 69, nice, in November. And then it corrected below 33 in early February while forming another inverse head and shoulders pattern. Before we continue here, we can kind of just see this potential pattern here, which everyone's talking about right now, the shoulder, head, shoulder here. And maybe we do have this move up to the mid 50s and then continue dumpiness is what this article is implying and what these Twitter analysts are implying here. So again, similarities are very important to watch for, but they are in no way guaranteed at all. In fact, I would even argue they're less than 50-50, which is just not very good. But a climb to 50,000 or even 60 may not absolve Bitcoin from its prevailing bearish bias, and basically saying just because if we get up to the mid 50s does not mean it's all bulls and excitement, right? We could absolutely have another pullback, which is more likely than it is not likely. And again, the article does end with some sense, basically saying Bitcoin has been treading against more optimistic fundamentals than 4 years ago, very much so, when it rallied from 4,000 to 69,000, nice, over about a 2-year period, which an increase in retail and institutional adoption is the main reason for this, and macroeconomic risks such as higher inflation are also driving this, with the recent announcement of a 7.5% inflation level in January, the highest in 4 decades. It continues to go up. And a lot of people would even argue this 7.5% figure is actually an underestimate or just lower than it actually is, right? I think it's very likely it's probably way worse than that. I think a lot of people agree with that as well. Again, it's not like we can trust the Fed, right? They said months ago that inflation was transitory, and then last month, what did they say? Like, oh, maybe it's not transitory. They have absolutely no idea what's going on. And funny enough, these Twitter analysts most likely know more than the Fed, right? The people that just made a Twitter account 2 months ago and are all of a sudden tweeting 30 charts a day and getting a lot of followers. It might sound silly, but I mean, unironically, they probably are more accurate than people that are paid hundreds of thousands of dollars by the government to research the economy. But to be fair, that is also to say almost nobody is accurate. In fact, the longer you analyze the markets, the less accurate you will be. It's basically impossible to nail things even 50% of the time. But Bitcoin price circles 44,000 as analyst says, who remains to sell here? And that's absolutely true, I think, as well. Despite anything that happens, it is still my firm belief that Bitcoin is the best investment. So maybe we are headed towards some very risky times, which looks very likely. What else are you going to invest in? You're going to keep your money in cash? Are you going to invest in these stocks that are also not doing great? Or something that is, in my opinion, the best, which is Bitcoin. So it held about 44, and fresh optimism about a macro low being avoided is there. But TXMC, another Twitter person, said here, when I consider everything Bitcoin holders withstood in 2021 and observing global de-risking for 3+ months, when I see 50% of realized caps still held from 3 to 12 months ago after a $33,000 drop that scared a lot of investors, all the existing priced in FUD, barring surprises, who else would sell here? And then also you can see here, Income Sharks tweeting about a move similar to from 30 to 60K, a double bottom, very sharp bullish V spike. Price action is just nice or just noise, and people are listening too much. And that's exactly what's happening. I think people are freaking themselves out a little bit. And as I've been saying for the past week and a half or so, this looks like the beginning of a macro multi-month uptrend. So, and again, even though the price has been boring the last week and a half, we have been doing things that we need to do for this uptrend to continue, not the opposite. Holding this 50-day is important for this uptrend to continue. Seeing the momentum slowly shift, seeing this sharp bottom, seeing an increase in volume here, those are all things you look for when we start to see the momentum swing. And so far, Bitcoin has defended the $42,000 level. And so far, Bitcoin has also defended these lows from the summer of 2021. New channel, absolute time sense alert as well. If you guys are interested in bonuses, trading, getting altcoins, make sure to check out all the links below. Some very good deals. Always protect your crypto. And as well, if you're interested in trading, you don't even have to trade real money. You can do simulated trading while the market is boring, while there's not much to do. Maybe learn a little bit about managing risk that you can apply to trading or not trading, right? You can apply these risk mitigation strategies, or just like shaping your mind around all of that by doing fake trading. You literally can do fake trading without risking a single penny, right? Below. And as well, guys, I have one Twitter and one Instagram. Both are in the comments and description below, pinned comments. Every other account is fake. If you leave a comment on this video and you get a response asking to like go to the WhatsApp or whatever, that's not me. That's a fake account. Don't respond to them. Do not give them a single penny. They just want to steal. That's it. You're for the McCube. It's for me.